Good afternoon, everybody. Good afternoon. Welcome to Paul's Monday Market Update, number 233 for the Monday, 3rd of August, 2026. I hope you're all well. Hope you have enjoyed this interesting start to the week and the month. Normally, we would be sort of getting ready to calm down, okay, for the rest of this month, based upon everybody going on holiday. But we live in interesting times, as the Chinese old proverb says, and there's plenty going on and plenty for us to talk about. Those of you joining us on the live stream or in the room, I hope that you can see the slides and hear my voice okay. If you can confirm that, fantastic. For those of you joining us for the first time, the Monday Market Update is just that, okay? It is me flying through as much as I can share with you over about the next 25, 30 minutes, looking at strength and weakness within FX indices and commodities markets, looking at a few charts of interest that you might want to add to your watch list, and then having a look at the live market. It is not a signal service. It's not trade recommendations. It is just me sharing with you what I'm looking at the moment, which may be of relevance or of interest to yourselves. As always, you are always very welcome here, but just remember that you are always responsible for your own trading and investing decisions. All right, let's get stuck in. Let's dig in. Okay, what's this? What's it telling us, and how do we utilize it to trading? So this is clips out of my own swing model. Okay, the STAM, where basically I'm looking to identify strength, trend, and momentum, primarily within FX markets, but also within indices and commodities markets. And the reason being that I find that when I've got a good handle on where the strength and the weakness is, it allows me to allocate my time, energy, and resources better for the week ahead. So what are these snips telling us, and how do we utilize it? So let's bring up the old drawing tool. So I do this mostly at a weekend. It's normally on a Saturday morning, okay? So basically the markets are closed, okay? I'm not disturbed. I get to sit down and do my work in a nice bit of peace and quiet. But equally, in 2026, by the time you have done the analysis on a Saturday, and by Sunday evening, it can already start to be a little bit out of date, because we live in a world where Mr. Trump makes his moves when the markets are closed. So we get sort of all sorts of shenanigans and volatility coming into the session. So we'll discuss that more in a moment. But what is this telling us? Where are we? How can we utilize it? So we are into week 32 of the year for the 3rd of August. Where's the strength? Where's the weakness? Well, the kind of longer term swing, strength and weakness, still had basically Kiwi dollar at top of the pile, with Aussie dollar, okay, in second place, having bumped its way up there. A lot of that to do with basically rate hike, okay, sentiment from them, basically pushing them particularly higher. On the flip side, okay, we had Canadian dollar at the bottom of the pile, along with Swiss franc, okay, and Swiss franc really has kind of rolled over and given up the ghost, okay, and that is very clear when we look at the Swiss franc pairs. Closer to home, all right, sterling was kind of just, it had basically sort of, let's say, ridden under a lucky star, shall we say, okay, over the last week or so. And a lot of that basically to do with effectively some dollar weakness, which was basically replicated in everybody strengthening, not because they had any strength, but because of the dollar weakness, all right. And a lot of that dollar weakness was seen due to the pause in those kind of US-Iran strikes. Call me a cynical old doffer if you may, but I feel part of the reason for those pause last week was invariably not to push bond markets that much higher, okay, so that Mr. Varsh could basically hold off on raising rates at the FOMC last week. As I said, maybe that's just me being a bit of a cynical old duffer, but we shall wait and see. But I think they're now looking at around about at the present trajectory, about 68% rate chance of a rate hike in the September meeting for the FOMC. Okay, but with that kind of dollar weakening, most others strengthening, including the sterling in that. Okay, euro fair to middling. Okay, but we're going to come back to the euro in the moment. As I said, dollar you can see weakening, having been pretty strong. Okay, for most of the last couple of months, it's weakened. Okay, there's a kind of a war off, risk on relief rally, okay, however you wish to term it. And what we had seen, okay, is Japan, okay, Japanese yen, which had been pretty much bottom of the pile for most of this year, had started to work its way higher, okay. And a lot of that is to do with the actions of like Thursday and Friday. So We had Wednesday night, we had FOMC. Thursday, okay, we had Bank of England. Friday, we had Bank of Japan, big central bankers speaking there, okay. And even though they didn't make any particular changes, all right, to their interest rate, everybody was hanging on the word about the sort of, let's say, the kind of sentiment and the future direction. With that, what we also saw was the Bank of Japan didn't raise rates, but they did intervene. Okay, we saw them intervening on Thursday, and kind of also interestingly, we saw the Americans, U.S. Treasury, Mr. Bessent, intervening there on Friday. I think the first time they've done that for decades, basically, for the directly intervened there. Mr. Trump was saying that it was all part of them helping to support Japan and support the overall global economy. You can make of that what you make of that what you will, and there's people far brighter and smarter who can give you the full in-depth sort of rundown on the reasons behind that. What I found interesting was that I think they did it through the New York Fed. Basically, what they did with the Americans is they didn't, whereas everybody was basically selling dollar and buying Japanese yen. The Americans actually sold euros and bought Japanese yen, which was kind of interesting because I think it keeps it off the treasury books, and B, it basically drags Europe and the EU into this, whether they like it or not. Or once again, maybe kind of C, maybe in a cynical old duffer, it's kind of an indication of, well, we're showing you who our friends are. We love the Japanese, the Europeans, not so much. All right. So, but as I said, that could be me being a bit of a cynical old duffer. But when we look at the markets there, okay, from the start today of the last sort of kind of 12, 18 hours, you can clearly see that the Japanese yen certainly did strengthen, all right, overnight during that Asian session, more intervention. And we basically, a little paused off a little bit, but we're going to look at the live markets in a moment. The kind of interesting thing is that, how is this going to be played out? Okay, is this a case of with Bank of Japan and Bessent, okay, and the US Treasury intervening? Is that enough to signal to the market to basically, get out of the way, all right, and realign themselves? Or is this kind of, blood in the water, all right, and it's going to attract the sharks who'll be circling around, okay, namely other market players looking to sort of test to see the resolve of both the Bank of Japan and the US Treasury. So it is going to be an interesting week. Okay, it was already going to be an interesting week, but we've got that going on. We have the continued, week on, week off peace deal talks, okay, between the Americans and the Iranians, and we'll see how that particularly plays out. We also have, we've got it's not a massive week, but it is a busy week in terms of some of the formal economic data coming out. So we've got American manufacturing PMIs later on today, but I think everyone will be looking at the kind of non-farms jobs numbers on Friday. That will be the kind of interesting one to see the kind of health of the economy. And as we'll look at in a moment, there's actually, it's still a really quite heavy and quite chunky Q2 earnings season. Okay, so as we're going to look at in a moment, we've got big boys like Palantir, AMD, SpaceX, Pfizer, Caterpillar, McDonald's, SanDisk, okay, Lilly, who else? ConocoPhillips, Oklo, etc. It's a full-on list, okay, and we'll have a look at a couple of those. But today I'm probably going to more focus on those kind of major FX pairs, in particular, sort of dollar and Japanese yen when we get to the live markets, because what we see going on here. When I looked at the indices and commodities, what it's showing me is still, even though the price action was kind of interesting at the end of the week, which we'll look at, NASDAQ still remains in a tactical short, okay, as does the Russell. DAX, okay, has got itself back into a happy place with a strategic buy, as has the FTSE, but we'll look at that in a moment. Nikkei's a tactical short. It's come back down to the 60,000 level. We'll look at, if we have a chance, we'll have a look. ASX is strategic buy. Oil still remains a strategic buy, even though we dropped considerably with the over the weekend with the kind of continued pause in strikes, shall we say. VIX at the weekend was it was all bullish in terms of, it was kind of depressed. Let's see how that particularly plays out, okay, over the sort of the next session or two in terms of those US markets. So as I said at the start, normally everybody's winding down. It's been a mad year as it is, and everybody's ready for a bit of a break, aren't they? Everybody's ready for a few weeks away, okay, just let it all quiet down. But that is not the case. And interestingly, those of you who trade, FX and Japanese yen, interestingly, the last few years, kind of end of July, start of August, there's always been kind of interesting, right? It's been volatile in the Japanese yen, all right? So I was kind of expecting something to happen, but even I wasn't really expecting the kind of joint intervention like we saw. So it's setting ourselves up for a tasty week ahead, ladies and gentlemen. If I look at the kind of latest STAM data, okay, so this is just a screenshot from the STAM plugin that people get on VTB stage 2, and I'm just looking at what's the very, very latest data. Well, what it's showing me here, Japanese yen, okay, is top of the pile there along with Kiwi dollar, okay, and interestingly for Japanese yen, the daily and the 4-hourly charts are strong across the board, okay. Aussie and sterling, okay, sort of taking up those kind of third and fourth places. Euro, interestingly, has been a little bit strong, and I wonder whether that is a little bit of a reaction to the to the Americans on Friday. That, as I said, there are people brighter and smarter than me that could give you that sort of in-depth fundamental insight. I just have to trade what I see in front of me. But when I look at the weakness, listen, Canadian dollar weak. Well, listen, oil's dropping off the back of it. Okay, Swiss franc, as we said, is weak, and US dollar. Okay, from being almighty a couple of weeks ago. You can see there it's rolled its way off the top there, and certainly the daily and the 4-hourly charts are just completing that sort of dollar weakness. All right, and we'll look at that in the live markets at the moment. Okay, so let's switch across to having a look at a few charts of interest. So just bear with me for a moment. I'm just going to switch across to the live markets, and we'll look. So just as I say, just bear with me for one moment, ladies and gentlemen. Okay, so few charts of interest. What is this? What are we looking at? This is JXY. This is the sort of Japanese currency index. And whereas you see me all the time, look at the dollar index. All of the currencies have their own index these days. You don't really trade it, or certainly I don't, but it is a useful tool to look at the kind of bigger picture. I have no doubt that every man and his dog is basically pulling up a chart of dollar yen, and so they rightly might be, okay, and that's absolutely fine. But I thought I'd just put up something a little bit different. Okay, this is Japanese currency index monthly chart up here. Let's get the old drawing tool. Back in 2011, having been in a fantastic run, okay, through the noughties, okay, we then had that lovely bearish engulfing pin bar key reversal peaking at the top, okay, followed by a lower high, and really, we were up here, okay, 132 in terms against the dollar, and it has literally been kind of one-way traffic. And I would look at this now, excuse my drawing, but as I say, I'm a better trader than I am an artist. I'd have seen that as a bit of a descending wedge there. So this is just giving an indication of, everybody's talked about how weak the Japanese yen has been. Well, that's a very clear indication for the last 15 years. Okay, we've been in that sort of downtrend, and certainly, okay, these last few years, that is kind of, it's been scrappy, but it's accelerated our way down. And look at that already for, we're only into really the first full trading day of the month, and it's looking like a big bullish engulfing candle, and that probably reflects the sort of the events of last week, which we'll look at in a moment. So as we have seen that going in one direction, okay, let's look at the Japanese 30-year government bond yields. All right, so not something we talk about or touch on a great deal here, but what we're looking for is invariably to see, what can this teach us? Okay, what can we be aware of? And whilst I will quite happily trade the Japanese yen, it is of course important to take a look at, all right, well, what's the direction of travel of the the government bonds. So once again, there are lots of JGB experts out there, okay, who can give you fantastic fundamental insight into Japanese government bonds, okay, and what goes on with them. But really, as I said, I'm primarily a kind of a trader, position swing, intraday, and I trade what I see. And when I look at this, okay, this is what, once again, this is on the monthly chart, and really, we had a little bit of a fright here, okay, back in 2016. Then we had kind of all the kind of COVID fright there. But really, ever since then, these last few years, you can see this 30-year bond yield has been basically one-way traffic, and that is kind of, I think, reflecting the kind of the nature of where the government bonds are going in terms of yield. Now, of course, you compare that to what the actual interest rate from Bank of Japan is, and that is considerably different. All right, and that is part of the problem. The Japanese, Bank of Japan, Ministry of Finance are very, very reluctant to raise interest rates, okay, to effectively stop the weakening of the yen, but they have a challenge in being able to do that because invariably the world and his wife has used the yen as effectively free money for the carry trade, and you basically you borrowed money in Japanese yen, and then well, depending upon your risk profile, you either stuck it in US treasuries or you stuck it into, US tech stocks or elsewhere, okay? And for the last few decades, the world has run on that. And so basically, if the Bank of Japan raises those interest rates and raises them as fast as they should, that is likely to see that kind of unwinding of the carry trade. And that's the kind of, let's say, conventional wisdom. Of course, the only thing with the conventional wisdom is that it's as wrong as it is right. But clearly you can see that 30-year there is tickling the soft underbelly of 4%, okay, and that is of interest to us. So I think all of us over the next few weeks are going to be interested in the yen, in the Nikkei, in Japanese government bonds, all right, because as I said, there could be real contagion if there's any kind of major moves, and that is why we are interested in seeing how do markets react to the Bank of Japan intervention, but also the US Treasury intervention. Is Bessent. He's playing a risky game, but to the winner go the spoils. All right. So yeah, fantastic chart. That's okay. That's just a great trend, isn't it? Absolutely fantastic trend. Okay, so let's look at a couple of charts of interest of some of the equities, okay, that we've got this week. As I said, there's lots of them this week, but I wanted to focus more on the sort of the live markets because of what we're going on. But what we do have after close today, Palantir, everybody's favorite Israeli AI tech defense company. Define them how you wish. This is the weekly chart of them. We've talked about them a few times. You can see that, it had been a fantastic trend, hadn't it, really? Fantastic trend, okay? You hear me talking to, new traders and stuff saying that, instruments, they don't trend as often as we'd like, okay? They may only trend like 20 to 30% of the time. So when you're in a good trend, don't fight it. You try and ride it, you try and surf it. But like Echo and the Bunnymen, okay, the best band out of Liverpool in the 80s, all right, sang nothing ever lasts forever, all right, and neither does a trend, all right. And we can see here, okay, back in November 25, we had this big at $200, we had this big bearish engulfing candle. It's a key reversal candle followed by a lower high, and we've just ground our way lower there, okay. And it's been a fantastic trick to see in terms of working our way back down to around about this, what I'd call like a shelf at around about $130. Look at that, we're beneath that weekly 20 period moving average. That's acting as kind of dynamic resistance there. What we're going to be looking for, are the numbers, okay? Are the numbers going to halt let's say the slide in tech stroke AI sentiment that we've seen over the last weeks? Will the good numbers out of there, if they print them, will that be good enough to basically, the way I'd look at it, I'd need to see us back above that weekly 20, okay, on the weekly chart to give me an indication that there is some bullishness. Or alternatively, okay, if the numbers are poor and sentiment is poor, do we drift our way down towards that big round number of 100? Okay, so it's interesting, of course, here in the UK, Palantir has been in the news a great deal. The incoming new coup government, Mr. Burnham, lots of his particular benchers, okay, want to get rid of Palantir out of any kind of let's say kind of state institutions, not necessarily because they're poor at their job, but because of the fact that they are an Israeli company. So that's a big wider open debate, okay, all right, in terms of thing. As I said, I am just a simple trader, okay. That at the moment is a downtrend, okay, it is a downtrend. So I'll be looking to see, can those numbers change that, or are they just going to accelerate that? Hence why it's on my chart of interest list. Talking of other great trends, okay, Caterpillar, all right, Caterpillar, this on the weekly chart, and once again, okay, we had this was the Trump tariff tantrum, all right, that we saw kind of drift away into it, bounce off that as a lovely monger, bounce off the weekly 200, and has just continued to be, and once again, a fantastic trend. Okay, an absolutely beautiful trend there, isn't it? And as I say, when it is in a good trend, you don't fight it, you find a way to surf it. But nothing lasts forever. Here, $1,000, and what do we get? We get, to me, that is a bearish pin bar. It's a bearish engulfing candle. It is a bearish key reversal. Price pushed to a new high, but rolled over and closed beneath the low of the previous candle. They don't happen as often as you would like, but when they do, especially when you're at big round numbers at the end of a trend, you take notice. And what we saw was kind of our drift down. And what has interested me is that last week, okay, you can see that we closed beneath the 20 period moving average, which we haven't done since May 25. Okay, so looking at that, what's that, about 13-14 months. Once again, they've got their numbers out, okay, tomorrow before the open. Is this a case of that those numbers will be there chrysalis for us to basically get back up above that weekly 20? That would be bullish. Or once again, do they kind of sort of accelerate us through the big round number of 800? All right, that's what we're looking, because if we is, well, then I kind of sort of see 700 as kind of a next area that we look at. Now, Caterpillar have been a fantastic story, and it's been a fantastic trend. But interesting, as I said, that's why it's on my charts of interest. We're at $800. We're back beneath the weekly 20 period moving average. Is it going to do, or do we get a little bit of a kind of a bounce before we work our way down to the 50? Okay, that's why it's on the list to watch and see how that particularly plays out over the next couple of weeks. And finally, for this week, before we switch to the live markets, we've got Uber Technology. I don't need to explain who Uber are, do I, or what they do? Okay, we look at them on occasion, but they are they've got their numbers out Wednesday before the open. Once again, weekly chart. It had been mostly, as you can see, kind of it'd been mostly kind of a good bullish chart, not without its challenges and its channels. I'm trying to say that to pace. But I think the last time we looked at this, what we were interested in, okay, or what I was talking about, was the fact that, bang, once again, we'd got up to the big round number of 100, and then we topped out. We'd printed this really nice bearish key reversal, engulfing candle, followed by another bearish engulfing key reversal beneath the 20, breaking that trend line, okay? And we talked about how we were likely to drift lower, and actually that has continued. All right, that's continued pretty much all the way through this year. And now I'm curious that we're down here towards this kind of channel low at around about 63, 64, 65, which is also where that weekly 200 is. I'll be interested to see, do those numbers push us down into that spot before we bounce higher? Okay, could that be just part of it, just push down, okay, sort of flush them out and head our way back up towards 80, right? Or if those numbers are poor and sentiment is poor and the Iranians start lobbing rockets again, okay, do we break our way through what has been a significant level of support through the weekly 200 and through that kind of big round number of 60? So as I said, it's a chart of interest for me because we've got earnings, but also the price action itself is at an interesting point, and I want to see, is this an inflection point at which we can take advantage of. All right, so there you go. Some charts of interest to add to your watch list. Okay, we can always learn from seeing other charts. Okay, another analysis. But if you'll bear with me, what we'll do is we'll switch across to the live markets now and have a look. I appreciate we're probably going to overrun today, but there's lots for me to share with you. Okay, and also this is the last one before we take a break. We'll be back 7th of September for the Monday market update. But let's look across at some of the charts. Whilst it does here, I'm just going to bring this up. We're going to come back to it in a moment. Okay, so this is one of my other profiles. This is one of my indices profiles. Okay, what are we looking at? How does it help us? You've got Dow on the weekly, NASDAQ on the weekly, S&P on the weekly, Russell on the weekly, FTSE on the weekly, Nikkei on the weekly, DAX, and then oil. Okay, so let's just put them all in a line. You see for yourself here, oil, having kind of rallied up, has fallen away there. Okay, and that's where we're trading beneath 80 there. Okay, on this as I say, war on, war off, week on, week off. That seems to be the kind of way we're working at the moment. But of course, that has its impact. When we look at that impact, I start to look at here. This is the start of the electronic contract coming into the Dow. Last week was kind of, it's an indecision there. Okay, some people might call that a doji, some people might call that a high wave candle. When I look at the sort of the Nasdaq, what I was intrigued was that we pinned the 20 there on the weekly chart. We've talked about it being kind of working its way lower, all right, but you're looking to see, well, actually, did we find support off the Iran affair? You certainly can see that kind of being that big bullish engulfing candle there again, the daily chart. My view is, and I've talked about this, is that the red is the daily 50, okay? And as long as we are beneath the daily 50, I see that kind of AI tech is mostly a kind of bearish sentiment. It needs to get above it to convince me that the good happy days are back in force. But yeah, certainly we had a little bit of a bounce. It has a pin bar. Can that follow it through? Will the earnings this week, and will the let's say the other events going on with US markets and also the geopolitical situation, will that be enough to basically give us a little bit of a relief rally? That's what I'll be watching for. S&P 500, not dissimilar. Last week's candle, having thought that we would kind of drift lower, we actually kind of had that little bit of a, it's a bullish pin bar. Okay, it's a bit of a 3-bar reversal. All right, so if we look at the daily chart, we are back above the daily 50, aren't we? We're back. The daily 50 has acted as significant support. We looked like, as I said, dropping, and I thought we'd go lower, but bang, we've bounced back above it, and you can see the kind of gap up today. Everybody's happy. Well, everybody's happy today, shall we say? Close to home, kind of that happiness has extended through to the DAX. This is the DAX on the weekly chart. Those of you who've joined me regularly, I've talked about how 25,000 has been that kind of lined in the sand, all right, for the DAX. Every time it's got above it, okay, it's never really been able to hold it. Never. Okay, I thought a couple of weeks ago we'd done it, but then you can see it came straight back down. But then here we go again, and this week has been basically happy now. Whether that is the geopolitical Iran situation, whether that's a case of them dumping euros. Okay, remember, if you're selling euros, that generally tends to be good for the kind of the reflective stock market. Okay, whether it's all part of that, all right. But anyway, we can see that bang, DAX there is trading above 26,000 on my chart. Okay, that's kind of a little bit of bullish happiness, I'd be saying there. Nikkei, based upon what we've just looked about in terms of Japanese yen, you can see that we have been drifting lower there after what had been a fantastic run from the Trump tariffs. Okay, we'd had a fantastic run in Nikkei, but you can see for yourself we drifted our way back a little, not massively dissimilar to Palantir, to Caterpillar, a whole host of instruments. Okay, kind of peaking out there, okay, in June time and falling our way back. And I see that we're sat on that weekly 20. Is that going to act as dynamic support for us? Okay, let's will 60,000 also be there? I'll be intrigued to see how this plays out by the end of this particular week. And then once again, yep, close to home, FTSE. So FTSE, managed to basically grind its way higher and close above the highs of the year. We talked about it being in this kind of in a symmetrical triangle and working its way higher, and also the fact that really price is above the 20, which is above the 50. Okay, it's bullish. It just doesn't necessarily fill us with a huge amount of confidence. Okay, if we go down to the daily chart, I think we talked about this last week about how the daily 50, see how it's acted as support, and we're just grinding our way higher now. I don't personally see that as anything as a great vote of confidence in the UK or Mr. Burnham. More a case of just a little bit of a relief rally. Okay, as basically we've gone into that kind of war off, risk on mode. Also the fact that when we were the week or two before basically in war on mode, that was good for energy and good for defense stocks, which the FTSE is packed with. So it grinds its high. All right, it grinds its way high. It's bullish, but it's grinding. Look at a couple of the commodities. Gold, weekly chart here, as I've said, just sat on 4,000, really. Still sat on 4,000 there. That's the way I look at it. Drifting its way there lower. The daily chart there is probably even more pronounced, isn't it? You might say, well, actually, Paul, it's a kind of boom. Really, this is a kind of a descending triangle that we've got here. And the question then becomes, will it break 4,000 and continue, which is what it should do, or will it just flush 4,000, capture all those kind of short orders that are there, and then bounce back up above the daily 50, which for me would be a real short squeeze and and a real move higher. But as you can see for yourself, 40,000, it's squeezing. All right, it's squeezing, and let's see what is going to be the catalyst for it to make its for it to move. Also talking about squeezing up silver. All right, silver here, it's underneath $60. You can see here just working its way. When I look at it on the daily chart, I probably look at this here in this way, kind of. I look at that as we're kind of coiling up a little bit there. All right, we're just coiling up there. Now, is that the calm before the storm? Is that the calm before the summer holidays? All right. Is that just the calm before a formal economic calendar chrysalis that basically, pumps silver higher or dumps silver lower? Okay. You take your pick, really. It could be any one of those. But I just have to trade what I see. And what I see there is it's beneath its averages, it's going sideways, pivoting around the daily 20 period moving average. And I see that as waiting for something to be the chrysalis for the next move on silver. And then Bitcoin, yeah, listen, it's still above 60. It's still kind of hanging on to the weekly 200. Yeah, we've had a little bit of a drift lower at the start of this week, but that's not a massive surprise. Okay. When I look at the daily chart, I mean, if you look at that daily chart for last month, I don't see anything there. We had a bit of PO20 daily support, but then we're back down here at this level. There's nothing I really see there on the daily chart that excites me or makes me sort of want to get into it either long or short at the moment. To me, that just looks like it's just working its way sideways. All right. Now, of course, when we've just looked at oil, gold, dollar, and Bitcoin, a lot of that is all to do with the dollar, and the dollar itself is kind of interesting. All right, that has got my interest. So we'll look at dollar, we'll look at Japanese yen, and we'll look at sterling. We always finish on sterling. As I said, we're overrunning a little bit, but there is lots going on and lots for me to share with you. So this is one of my dollar profiles. Bang. So let's have Aussie on the daily, Euro on the daily, pound on the daily, dollar Swiss, Kiwi dollar, dollar CAD, dollar yen, dollar index. And actually, here's what I'm going to do here, just because I was doing my monthly charts at the weekend, looking for my kind of monthly move setups. Okay. And what became apparent to me is that when it came to the dollar, and of course everybody's intention is on the yen, and quite not unreliably or not unrealistically, what interested me was that when I was looking at the monthly charts, okay, bang, Kiwi dollar is a monthly bullish inside bar, Aussie dollar is a monthly bullish inside bar, Euro dollar bullish monthly inside bar, dollar Canadian bearish inside bar, not so much on cable. Dollar Swiss is a nice kind of bin bar, and of course dollar yen, which we can look at more as in a bullish engulfing candle. And actually, I went through a whole host of dollar pairs. All right, pretty much all, dollar against Norwegian krona, okay, Swedish krona, Mexican pesos, Brazilian reals, Russian rubles, etc. And it was an interesting month, okay, for that dollar. Now, once again, those inside bars could be just a sense of, after the volatility that we'd seen in the early part of the year, that invariably the sort of everything's compressing before this kind of summer break, the calm before the storm. The question is of interest to me is that, well, normally I would probably expect August to be pretty quiet. And if July's candles created inside bars, I'd probably be expecting August to really create another inside bar, almost like double trouble, a little bit of an inside bar and stuff. But with what we have going on, we will have to wait and see on that. But it is just worth noting now, those monthly candles, okay, the opportunity to see that, yeah, across the dollar pairs, there was an awful lot of that dollar price action working its way up there. And then let's take that a little bit, let's say that a little bit further in terms of, okay, if we look at the dollar index, all right, the dollar index now, we talked last week, we were above 100, above the area, above this kind of demand zone. And really now, I looked at this as a flag pattern, but really, that is now a weekly DTB 123, okay, double top, with the second leg being a really very nice bearish engulfing, bearish, key reversal candle. That's a pretty strong statement, isn't it, on a weekly chart? Okay, a pretty strong statement. And as I said, does it have what it takes to follow through on that? If we go down to the daily chart, okay, we can see we're beneath that 50. This is after those, the kind of pause in the war, FOMC, Bank of Japan intervention, American intervention. Okay, it's just kind of, as I said, it's putting that double top, and we're beneath that 50 there, and also we're beneath the big round number of 100. All right, can it stay there? Okay, are we going to get maybe a little bit of a kind of just a bounce before we work our way down to the 200? That's what I'd be kind of looking for. Does we come up to the kind of 2050 area before we do that? All right, that's what I'd be looking as a possible scenario for this week. All right, so it's kind of Trump does not want interest rates being raised in a midterm year running into those elections. Okay, so I suspect we're going to see all manner of shenanigans to basically avoid any chance of getting rate hikes before midterms. That's, once again, that's just my particular view there. So there you go. There's the dollar. Take a look at those monthly charts. You might find something of interest. All right, so let's have another look at Japanese yen itself. So this is my profile for Japanese yen here. So what have we got? Dollar yen on the daily, euro yen on the daily, pound yen, Swiss yen, CAD yen, Aussie yen, Kiwi yen, and the Nikkei. Okay, so this is one of the reasons I have these profiles on various platforms like this. Because hopefully you can just see in one quick snapshot what the story is. All right, and what we see in the story there is basically everything else being sold and Japanese yen being bought, and in particular what we saw, dollar being sold and also euro. I think I read somewhere at the weekend that the kind of US Treasury has about $26 billion worth of euros on hand, on cash in the till, shall we say, and they were able to basically to use that. But interestingly, as I said, you can just see across the board what's gone here on here. Okay, and we did see a little bit of it, but if you notice, these daily candles, we're starting to get little wicks here. Okay, now of course the US session could completely change that again. All right, once the Americans come in, but I'm kind of curious to look at. Let's have a look at like euro yen. We can see which way it's gone. If I go down to the 4-hour chart, yeah, you can see the way we dropped lower and actually, we gapped down, fell down, but then actually kind of worked away. Now, admittedly, this could be nothing more than a dead cat bounce, right, that comes up and fills the sort of gap there. And it could indeed be that. Okay, I wouldn't be utterly shocked. But yeah, if we looked at all of those yen pairs, this is the 1-hour chart now. We had that intervention overnight. We dropped, and then for pretty much the London session, for all of those yen pairs, we did nothing. There was no real strength of reaction there. And as I was saying earlier, what everyone's going to be looking to try and understand is, with the yen, with the Bank of Japan and the US Treasury and Mr. Bessent, does the market basically realign itself and get itself out of the way, or do they just take this as a test and want to sort of push the Bank of Japan and push the US Treasury to see how deep their reserves are, how strong their conviction is. Okay, so as I said, it's going to make for an interesting week. I'll be curious to see what these yen charts are like by the end of this particular week. But you can see for yourself there. That's pretty much that's yen strength. Okay, coming into that. All right, that's what we're seeing. And so invariably, my STAM when I do it this Saturday, will be very, very much different from that. So this is very much a case of watch and shoot. All right, so as always, let's finish with sterling. Okay, here. So all the excitement is elsewhere, but we can look at sterling. Okay, so once again, sterling profile. So I've got cable, euro sterling, pound Aussie, pound Canadian dollar, pound Swiss, pound Kiwi, FTSE there. Okay, as well. So listen, pound yen, you can see we've just talked about that. You can see that that's you can see the direction of travel there, can't you? Pound against dollar is just a bit of an interesting one. I talked about this the last week, namely what we were seeing here was bang, this big green bullish candle was was basically the market being told Mr. Miliband was not going to be the chancellor, and so there was a relief rally of that. But then Mr. Bennett took over, and we kind of drafted our way lower. And then I'd say this is the kind of nice Morningstar formation there, okay, daily Morningstar. And then actually what we've done is this is the dollar sell-off, right? I would not call this sterling strength. I'd call this just the flip of the of dollar weakening. All right, that would be my particular view on that. 4-hour chart, yeah, but you can see how it's worked. We gapped up and we worked our way down this morning. All right, double topped overnight. Okay, that's the 30-minute chart coming into the London session. Not a terribly exciting London session there. Okay, but that's what we're seeing there with cable. Pound against Swiss franc, interestingly, I talked about it. We've talked about this for a while. Okay, we had Swiss franc weakening. Okay, from the all the way. All right, you can see great trends. Sterling strength, Swiss franc weakness. Nice daily flag patterns worked our way up. But the thing I was talking about last week was that Swiss franc, as you saw earlier, has fallen to the bottom of the STAM, and yet sterling just went sideways against it. Okay, which was telling me something that sterling strength that everybody was crowing about wasn't really perhaps as deep and as thick as people might have expected. So we're looking at it there. Okay, I'm looking to see, well, do we break out of this now? All right, do we break out, and what? And if so, what are we doing? We're going to get a continuation of that particular trend. Pound against Kiwi dollar. Well, Kiwi dollar is top of the pile now, isn't it? So no surprise there to see how that has reacted there on the daily chart. Okay, we've just seen that basically sterling moving weaker, or Kiwi kind of moving stronger. Pound against Aussie, messy, back down to 190, and then we've just invariably had a little bit of a bounce from there. Okay, just a little bit of sterling bounce more so than anything else. Pound Canadian dollar, okay, we drifted lower when this is kind of like war on, oil price up, and then you've basically got war off, oil price down. All right, and we've got a little bit of strength going on there against Canadian dollar. Euro against sterling, we're kind of, you can see for that's been quite some move there, hasn't it? If you look at that in that daily charts, we had, what's that, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 11 bullish closed days. All right, I know it might say it's pinball, but it did close higher than it opened, as did here. That's kind of an interesting sort of take on kind of, sterling weakness and a little bit of euro strength. All right, I'm going to watch to see how this particularly plays out over the next couple of days. Okay, there we go, ladies and gentlemen. Let's draw it to a close there. I appreciate that we overran a little bit, but as I said, there's a huge amount for me to kind of share with you. Lots going on in the markets at the moment. I hope you found that useful. I hope that's given you a little bit of help, a little bit of insight. I appreciate that I am racing through it because I'm just trying to share with you as much as I possibly can in my own take. As always, okay, it is going to be an eventful week, so make sure you're on top of the news flow, make sure you're on top of your order flow and risk on, risk off, and make sure you are managing risk. I hope you have a fabulous trading week, and I also hope you have a fabulous August, okay, a fabulous month, okay. So as I said, we'll be back. Monday market update will be Monday, 7th of September. In that time, okay, listen, have a great time, okay? Enjoy a little bit of time away from markets if they allow us to. And I'll speak to you then. All right, trade well, everybody. Cheers. You're very welcome, Peter. Thanks for joining us, okay? See you in September. Have a great August. Thanks.